Good afternoon. This is Eve Gilman with Adoptive Families Magazine, and today we are talking about the adoption tax credit. You may have heard that you can use this to offset the expense of building your family through adoption, but how does it work? How do you claim it? Which expenses qualify and how do you document them? Are there different guidelines for families adopting domestically, internationally, or through the foster system? And what about expenses incurred during a failed adoption attempt? We are very pleased to have Becky Wilmoth with us to share her expertise on these topics today. Becky is an enrolled agent and the adoption tax credit specialist with Bill's Tax Service in Centralia, Illinois. She and several of her colleagues at Bill's Tax Service have been touched by adoption, and they are passionate about helping as many people as possible with the adoption tax credit. Today's webinar is brought to you by America's Christian Credit Union. America's Christian Credit Union is committed to helping members make an impact in the culture around them. They believe that one of the most beautiful ways to do this is by helping a child find a loving and forever family. You can find them online at americaschristiancu.com. And thanks to our sponsor, America's Christian Credit Union, this webinar's recording will remain free. You'll be able to find this replay link at adoptivefamilies.com/webinars, and it will be emailed to everyone who registered. And members of our site may listen to our full audio library at any time, and you can join our site at adoptivefamilies.com/join. During the webinar, please note that all attendees will remain muted. You can submit questions by typing them in the questions box in the control panel on the right side of your screen. And as a quick disclaimer, we wanted to note that the information in this webinar is intended for educational purposes only and is not meant to replace direct consultation with a legal, medical, mental health, adoption, or financial professional. And now I'd like to turn the line over to Becky for her presentation, and then we'll have time to answer some of your questions. Thanks so much for being here today.
Thank you, Eve. First, I want to give a little introduction of myself. My name is Becky Wilmoth. I am an enrolled agent, and the first screen that we're going to look at just tells you a little bit about us. I am a member of the National Council for Adoption. It's also called National Adoption League. I'm a member of the North American Council on Adoptable Children. I am also on the Accounting Advisory Board for Kaskaskia College. I am a member of the National Association of Enrolled Agents, National Association of Tax Professionals, Illinois Society of Enrolled Agents, National Foster Parent Association, and I do a lot of articles, webinars, podcasts, and then we also travel all over the United States after tax season. We speak and exhibit at adoption conferences, and our main goal is to help as many families as possible. Quite a few years ago, we saw the desperate need for adoptive families to know about the adoption tax credit. So we set out to educate adoptive families, caseworkers, agencies, adoptive attorneys, adoption attorneys to help them understand how it can help their clients and how it works and the nuts and bolts of how it works, because there was so much misinformation out there that we started local seminars, and it's bloomed into a nationwide mission for us. Service. They are also enrolled agents. She is on the board of directors for Southern Baptist Children's Home, and we're also a member of Christian Alliance for Orphans. The most important part to know about us is that we have been blessed by adoption. Many in our office, my boss and his wife, have adopted 2 children out of the foster care system, one girl that was originally from Guatemala, and then I have been blessed by adoption. Several in our office have been blessed by adoption. So it's really personal for us. And whenever we first went to one of our first adoption seminars and conferences, they wondered why was a tax business at an adoption conference. And then once they heard our story and understood why, that our goal is to help as many as possible understand how the adoption tax credit can help them. So that's why we do, what we do. I want to explain to you for a few minutes what exactly the adoption tax credit is. The adoption tax credit goes way back in the tax code, and right now It is a non-refundable credit, but it is a permanent part of the IRS code. Back in 2010 and 2011, it became refundable. And those were the only years that has been refundable so far. And there was a lot of returns that went under review in 2010 and 11 because it was such a large refund. Even though it is not refundable at this point, there is a bill in the House and in the Senate right now trying to get it refundable again. And so we encourage everyone that we talk to contact your senator, contact your representative, ask them to co-sponsor this Adoption Tax Accountability Act, because the more senators and representatives that co-sponsor this bill, the more likely it is to get passed and to get refundable again. Now, the adoption tax credit is a one-time credit, and it is generally for children who are under the age of 18 years of age. Now, as I said, this has been an ongoing credit for many years. It increases a little bit each year. The amount of credit increases, and then the phase-out range also increases. So what happens is when the adoption tax credit, depending on the type of adoption that you have, determines when you can take the credit and how it's used. The most important part to remember about the adoption tax credit is that all adoptions qualify except you adopt a spouse's child. And these are qualified adoption expenses. One of the most important parts to remember about what is qualified adoption expenses: all adoption expenses that are necessary for the adoption. When, travel expenses, agency fees, lawyer fees, dossiers, family books if they're required by the agency. If you are doing an international adoption, a lot of times you will have to have a phone in country that is strictly for the orphanage. That is a necessary adoption. One thing to remember that is not a qualified adoption is birth mother expenses. So if you pay the expenses, the birth mother's living expenses and things like that, those are not qualified expenses. But your legal fees, your adoption fees, your court costs, your traveling expenses, all of those things, postage, all of those things are considered qualified adoption expenses. Things that you would normally buy for a child, a twin bed set, those are not, qualified adoption expenses. You would buy that whether it was an adoption or a natural child. So the thing to remember that they have to be necessary. Whatever that agency, if it's required by the agency, then that is a qualified expenses. Now, the last few conferences and webinars that we have done, there's been a lot of questions about failed adoptions. So I want to cover that for just a few minutes. Expenses for failed adoptions may qualify for the credit if followed by a successful adoption, but the two adoption efforts would be considered as one adoption and subject to the dollar limit per eligible child. Now, there is two different ways that you can take expenses for a failed adoption. This is for domestic only. Domestic only can you file for failed adoption expenses, and it has to be the following year after the expenses were paid. So say, for an example, say you paid expenses in 2016 and that adoption failed. You cannot take those expenses until you do your 2017 tax return. Now, what would happen is you would have to, that adoption tax credit could be taken on your 2017 return. Your return would have to go paper because you would not have a Social Security number to attach to that adoption tax credit. So you would send that return in paper, put not final where it says for the child's name, and you would attach a list of paid expenses from your agency that shows that those expenses were paid. Now, you have a successful adoption after you have a failed adoption. You can put those two expenses together and file for one on the successful adoption. Or if you do it separate, if you do the failed adoption and then you do the successful adoption, the amount of the credit that you received in the failed adoption must be taken off or out of the successful adoption. So a lot of times it's easier to just put the together on the failed adoption and on the successful adoption and claim it all at one time. But if you choose to do the failed adoption separate from the successful adoption, you just must remember to make sure, and that has to be taken out, whatever you received first on the failed adoption must be taken out on the successful adoption. And once again, that has to be strictly for domestic adoption. Now, there are several different types of adoption. And the maximum amount of the credit that we're going to talk about in a few minutes applies to each one, but how you use it is determined by what type of adoption that you have. If you have a private domestic or international or a foster care adoption. Now, for the foster care adoption and for the international adoption, they must be final before you can ever take the adoption tax credit. Again, I want to emphasize, for an adoption out of the foster care system and an international adoption, they must be final before you can take the adoption tax credit. Now, on the private domestic adoption, as I said before, if you want to take the expenses before it's final, you must wait a year. As I said, if you paid expenses in 2016 and it was a private domestic adoption and it was not final, you cannot take those expenses until the following year. So many choose just to wait and you can accumulate the expenses, because many times there's expenses over several years, and you can wait until that domestic adoption is final. Now, for IRS purposes, no child is considered special needs for international adoptions. For foster care adoptions, what you and I consider special needs and what the IRS considers special needs is two complete different things. What the IRS considers special needs is hard to place. And if your child is declared special needs according to the state's criteria, you will qualify for the full amount of the adoption tax credit with no expenses. And that subsidy agreement that has that child as special needs, hard to place, that is what qualifies that child as special needs. Each state will call it something different. Some states call it adoption eligibility assistance determination, but it is actually the subsidy agreement that you sign with the state. That is, with that child marked special needs, is what qualifies you for the full amount of the credit through the foster care system. And like I said, for international adoption, it must be final before you can claim the adoption tax credit. Now, there's a dual benefit of the adoption tax credit. The dual benefit is that you can, if your employer is a qualified adoption benefit program, you can exclude up to the same amount of the credit from being taxable income. Your employer has to have a qualified adoption benefit program, and that is, they get that through approved through the IRS. But the great part about that is for example, for 2016, which is the tax return that we are doing right now, the adoption tax credit was $13,460. So if you have enough expenses, let's say you have $28,000, $30,000 in expenses, you would have enough to claim $13,460 for the credit and exclude, your employer with a qualified program could exclude up to $13,460 of your income as taxable income. So there's a dual benefit that just cannot be for the same expenses. Both the credit and the exclusion can be claimed for the same adoption. They cannot be claimed for the same expenses. And as I said, what you and I consider special needs and what the IRS considers special needs is two separate things. So for international adoptions, it is for expenses only. For foster care adoptions, they must be considered special needs according to the state's criteria in order to qualify for the full amount of the adoption tax credit with no expenses. And as I said, for the foster care and international, they must be final before you can claim the credit. And for the private domestic, you have to wait until the following year in order to claim those expenses. The adoption tax credit, when 2010 and 2011, when there was 68% of adoption tax credit returns went under review, the reason was because there was some very large refunds that went out that year and because of the documentation issues. So we have compiled this list to help all of our families. So I highly recommend that you get one large envelope and mark it IRS documentation. And on there, put the following good copies of the following documents in that folder. That way, whenever you come home, you put all of those documents in that folder. So if the IRS ever requests that documentation, you will have it. As of right now, the adoption tax credit is non-refundable and it can be filed electronically, and no documentation is required to be attached to the return. In prior years, it was required. That is no longer required. However, in the event that it does become refundable again, I look for them to request documentation to be included and sent in with the return. So this is the most important part as far as documentation. For all adoptions, you need the final judgment of adoption. For the foster care adoption, you need that subsidy agreement that declares the child's special needs. So for foster care adoptions that are declared special needs according to the state's criteria, the two things that you need to keep in that envelope marked IRS documentation, number one is the final judgment of adoption, and number two is that subsidy agreement that declares the child's special needs that you signed with the state. For foster care adoption, that's the two documents that you need to keep in that envelope. Now, for all other adoptions, let's talk about private domestic adoptions. You will need a copy of your home study and placement agreement, and you will need the final judgment of adoption, and then you will need documentation of all your paid qualified expenses. You need to keep track of all of the paid qualified expenses. Make good copies, put the final judgment of adoption, a good copy of your home study, and a copy of all the qualified expenses in that IRS envelope marked IRS documentation. Now for international adoptions, you will need to keep that final judgment of adoption. You'll need to keep the copy of the home study, and then you will need to keep a copy of the paid qualified expenses. One thing you need to remember on international adoptions, a lot of times the receipts fade very quickly when you get back. So something that you need to remember is to make sure when you get home that you make good copies, and then whenever you make sure when all adoptions are finished, you need to make sure and get that final step of the Social Security card changed. Sometimes when families get home, they forget that one final step. You need to make sure that Social Security card is changed before you ever file your next tax return, so that the Social Security records and IRS records match whenever you go to file your tax return. Now, one very important thing to remember is that all of these documents, the final judgment of adoption, the subsidy agreement, the home study, all of those documents must be signed and dated by the authorities. If they are not signed and dated by the authorities, the IRS will not accept them as valid. You know, sometimes you get the preliminary copy of the document. You need to make sure that you have that final document that shows either the judge's signature or the agency's signature. Just remember to make sure that those documents are signed and dated, and then make good copies of them and put them in the envelope marked IRS documentation. And since the adoption tax credit is not refundable at this time, if you have not used all of it the first year you claim the adoption tax credit, you can carry that forward for up to 5 years. So in the event that you have a carry forward credit and the adoption tax credit becomes refundable again, you are going to have that carry forward credit right there, sitting, waiting for you to be refunded to you. But I expect that they will require this documentation that, with our prior experience, that has what has generally happened when the adoption tax credit has went from non-refundable to refundable. And I'll explain the difference between refundable and non-refundable in just a few minutes. So it's very important to make sure you have the IRS documentation in your possession in a folder ready to go in the event that you need it. The tax returns that we're doing right now, of course, is your 2016 returns. The adoption tax credit for 2016 is $13,460, and at this point it is non-refundable. For the year 2017, it is going to be $13,570. As I said, it generally ranges a little under or a little over $100 each year. It increases. Now, the difference between a non-refundable and a refundable credit is what it covers. A non-refundable credit covers your tax liability up to the maximum amount of the credit, which for 2016 is $13,460. And if your tax liability is under $13,460, what you do not use of that, you can carry that forward up to 5 years. Now, if the return is refundable after your tax liability is met, you would get all of the rest of the credit refunded to you with your withholding and any child tax credit. But what happens now, since the adoption tax credit is non-refundable, the adoption tax credit comes in, takes care of your tax liability, and then it bumps down the child tax credit to additional child tax credit. Now, one of the downfalls of the adoption tax credit being non-refundable at this point is there are some things that it does not cover. Since it is non-refundable, it does not cover self-employment tax. It does not cover first-time homebuyer payback. And it does not cover the 10% penalty when you take something out of your pension early, before 59 and a half. There is that 10% early distribution penalty. Since it is non-refundable at this time, it will not cover that. What the adoption tax credit covers is what's on line 44 of your federal 1040. So once the adoption tax credit comes in and takes care of that, there's a few credits that will still be above the adoption tax credit, like dependent care credit and retirement savers credit. But once that tax liability has been met with the adoption tax credit, it bumps your child tax credit down to additional child tax credit, which is refundable. So the basics of it is your tax liability is being met with the adoption tax credit, and then the rest of the child tax credit is bumped down to additional child tax credit. So as long as you have not went over the maximum amount of the credit, you will receive your withholding that was on your W-2s, and you will receive additional child tax credit if you qualify to claim the child that year as a dependent. One thing you really need to pay attention to is if it's an international adoption, the child has to be home the last 6 months of the year in order to claim him as a dependent that year. If not, if they came home the last 6 months of the year, you will claim them as a dependent on the following year. But remember, as a non-refundable credit, it covers your tax liability, and then what you do not use, you carry that forward for up to 5 years. So it's still a great credit. You're just not getting it all at once. You're getting it in chunks. That's the best way to describe is that you're getting it in pieces instead of all at once. Years ago, we would, determine our taxable income, and then we would go to the tax book, and it would show us the amount of tax that we should pay for our taxable income. That's what the adoption tax credit covers, is that amount of tax on your taxable income after your standard or itemized deductions and after your exemptions. That taxable income is what determines your tax, and that is exactly what the adoption tax credit covers. As I said, the only three things that it does not cover self-employment tax, it does not cover first-time home buyer, and then that 10% penalty on early distribution. Now, each year for the phase-out ranges, there is phase-out ranges on credits. And this one for 2016 is $201,920 to $241,920. There's always a $40,000 range, which is a very large range for a credit phase-out range. So if your modified adjusted gross income falls between those two numbers, what's going to happen? It is going to fall off in increments of the amount of the adoption tax credit that you will receive until, if you get to the $241,920, you will not qualify. Now remember, it's not adjusted gross income, it's modified adjusted gross income. On modified adjusted gross income, things have to be added back in that are taken out to determine adjusted gross income. So once those things are added back in, that determines your modified adjusted gross income. So keep that in mind. Some of the front page deductions are generally like all of the Social Security is not taxable. If IRA contributions, student loan interest, things like that are added back in whenever you are determining modified adjusted gross income. These are some of the most asked questions whenever we do webinars, seminars, and conferences is, what about grant money? I've received some grant money. Do I have to claim it at income? How does it work with the adoption on the adoption tax credit with our expenses? All grants that you receive must come off the top. So let's say, for an example, you have $25,000 in adoption expenses, but you receive $15,000 in grants. So what would happen is you take that $15,000 off of the top of that $25,000, and you have $10,000 worth of qualified expenses that you can claim for the adoption tax credit. Again, on foster care, if the child is declared special needs, it has to be for the foster care system only. and they have to be declared special needs by the state's criteria. Now, each state has a separate criteria. For an example, one state is any child over the age of 1 is considered special needs. In one state, it's any child over the age of 3. For example, in Colorado, it's 7 years or older or a member of a sibling group. There's a lot of states that if they are a member of a sibling group of 2 or 3, or because of their ethnicity, or because of their age, or some states have some physical developmental issues that may qualify them as special needs. Each state has a different criteria as to what qualifies as special needs. But most of the time, if they have that subsidy agreement, there is a very, very rare case that they do not qualify for special needs. So if you are in question, look on your subsidy agreement and see if there's a box or a line written that says this child qualifies as special needs, or you can email me, and I have the list of what qualifies for each state. If you are, for your particular state, if you're wondering what it was, you can drop me an email, and it will be in our slideshow. And you can, email me your particular state, and I will be more than glad to share with you the information. But as I said, that is through the foster care system. What you and I consider special needs and what the IRS considers special needs is two separate things. So for the IRS, no international adoptions or private are considered special needs. It's strictly for the foster care system. The only option technically that does not qualify for the adoption tax credit is stepchild. It can be your spouse's child, and I want to explain to you the difference between a tax credit and a tax deduction. There is a difference. A tax credit is a dollar-for-dollar reduction in your overall tax liability. A tax deduction lowers your income, which in turn lowers your taxes according to your tax bracket. For an example, the standard deduction for married filing jointly is $12,600. Well, that is like a pie, that is pieces that is put together, and if your itemized deductions do not come over that $12,600, we use standard deduction for you because that is what's going to be best. Your itemized deductions are things like mortgage interest, real estate taxes, charitable contributions, unreimbursed employee business expenses. All of those things are considered itemized deductions. Those are a tax deduction which lowers your taxable income, which lowers your tax. That's what a tax deduction is. What a tax credit does, it actually comes in and takes care of your tax liability, okay? Which the taxable income is what determines your taxable liability. But the difference is that tax credit actually comes in and reduces your tax. So if your tax liability is over the $13,460 amount of the adoption tax credit, then it would use your other credits and your withholding to finish covering your tax liability. But if your tax liability is under the $13,460, then your tax liability would be covered, you would get your withholding back, and then you would carry the remaining forward to the next year, and you can carry it forward for up to 5 years. So technically the adoption tax credit is good for 6 years, so you can use it in chunks depending on what your tax liability is. And one of the other important things is go to your employer and ask them, do we have a qualified adoption assistance program? And if your HR Human Resources Department does not have a qualified adoption program, ask them if they are willing to invest in that, because it is a very popular credit. There are a lot of large companies that have qualified adoption programs, and there's people that go to work for them while they're in the process of your adoption for that reason. And I'm sure if you've been around adoption very long, you know quite a few of those organizations that are very pro-adoption. So definitely have your employer look into if they don't have a qualified assistance program, if they are willing to do that. And here are some links to different to give you some assistance. The adoptiontaxcredit.org, they are fiercely supportive, as we are, of the Adoption Tax Credit Refundability Act, trying to get it refundable again. Thankfully, this is a very bipartisan issue on both sides of the aisle. Both sides love the adoption tax credit. So we are a sponsor of several of the organizations in the Adoption Tax Credit Working Group. So you can go on the adoptiontaxcredit.org, and there is a link on there where you can find your senators and representative, and you can contact them and say, hey, where do you stand on this? Would you please support this bill? Help us get it refundable again, because it helps so many more families. And it's very important because in our office, we do hundreds of adoption tax credit returns a year. And one of the things that we have found with statistics is, over half of the families that have adopted, once they realize, hey, we can do this, whether it's through grants and fundraising or however, they choose to do it, they realize, hey, we can do this, whether it's low interest loans, whether it's, and then the adoption tax credit comes along behind them and helps pay them off those loans. However you can do that, they realize that we can do it, and 50% adopt again. And that's the whole reason that you and I do what we do, and it's a burden and a passion for us. And one of the questions that has been very prevalent lately is, okay, I have a failed adoption, or my adoption was not final, or my agency closed. What do I do now? You have a couple of options. Obviously, if it was if the agency is closed, the only thing that you're going to have is a copy of what you have paid. So what you would have to make the decision to do is, do you want to, if you are in the process of another adoption, do you want to put those expenses with the successful adoption and do it all at once? If you want to file for a failed adoption that's not final, you would have to wait until the following year to claim that. The return would have to go paper. You would put not final on the return, and then whatever you received as a credit on that return, you would have to take that away from the successful one that you have after that. And then once that is done, then you can start over in the process as far as claiming adoption expenses. But you must have a successful one after that in order to start over again. You can't just keep claiming expenses and keep claiming expenses. And whatever amount you receive on that failed adoption or unsuccessful adoption goes against the successful one when you do have a successful adoption. Some agencies, I know when one agency has closed and you go to another agency, some agencies will give you a credit, for what you have paid to the other agencies. Sometimes they will, sometimes they won't. It's basically an agency by agency basis. But just the main thing to remember is, if you have a failed adoption, you have to wait until the following year. So if you paid those expenses in 2015, you cannot take them until you do your 2017 return, which you would do at the beginning of 2018. And you can go onto our website, billstaxservice.com. There is 2 articles on there that I have been asked to write for 2 different adoption magazines. And it's basically of nuts and bolts on how the adoption tax credit works. And if you have any questions, you can email me. My email address is becky@billstax2.com. And that's all I have for right now, Eve, if you want to open up for questions. Are you there, Eve?
Becky, I'm trying to get Eve's audio working.
Okay. Okay, while they are trying to get Eve's audio working, what I am going to do is I have quite a few clients that, because of their status as self-employment, they don't understand, how the adoption tax credit works when you're self-employed. When you are self-employed, you are basically taking the responsibility of Social Security and Medicare. And because when you are employed by someone else, they pay half and you pay half. But when you are self-employed, that is the part that it does not qualify. Okay, I have a question that says, you had mentioned that a child adopted internationally has to be home with you for 6 months to claim them as a dependent. Is there a similar custody requirement for domestic adoption for foster? No, because they were United States citizens when before their adoption began. So the only thing that is required is because they were U.S. citizens before that adoption began. So for foster care and for domestic adoption, that is not a requirement. But for international adoption, it is a requirement. And it all hinges on because of the U.S. citizenship. How does the IRS define a failed match, payment of matching fee, payment of expectant mother expenses? There is no qualified expenses for expectant mother. They do not qualify as adoption expenses. A failed match is obviously something that is not final and is not going to be final. So that would fall under the same category as having to go paper, and you would put not final on the Form 8839, where normally the child's name and social security number would go, and you would it would be not final. And then when you have a subsequent successful adoption after that, you would reduce the amount by what you received for the failed adoption, which you received, would go against the successful adoption. And as I said, payment of expected mother expenses are not qualified expenses. Well, I think I answered that, but I'm going to repeat it again. If you don't have a name or identification number for the child, the return would have to go paper, and you would have to put not final on there, because you cannot electronically file it without the name and social security number. I have heard that the tax credit can be claimed retroactively. We finalized in 2014. How do I claim this on my 2016 return? You need to go back and amend your 2014 and your 2015 return and take the credit for 14, carry it forward to 15, take the credit for 15, and then carry it forward for 16 for whatever, depending on what your tax liability is, would determine the amount that you can carry forward. But you need to go back and amend your 2014 and your 2015. Yet, one of the questions is, if the family cannot claim birth mother expenses, but there is a failure, can the agency provide a tax donation letter? No, what the agency would have to provide is what was paid to the agency, all of the fees other than the birth mother. One of the questions is, we received a large amount in monetary gifts towards our adoption. Do we have to pay taxes on the money that people gift us? No, you do not. Will this reduce the amount we can claim for the credit? No, they're gifts from individuals. That's exactly what they are. Unless they're over $14,000, you would have to do a gift tax return. But if it's just a personal gift, that does not count. Oh, Eve can hear me. Thank you, Eve. Wonderful. Now, one thing you need to remember is if you are selling something, let's say you're selling jewelry, just for an example. You decide you're going to sell jewelry for your adoption. That is something that you would need to claim the income and the expenses on a Schedule C. Keep good records. Make sure you claim the correct amount of income and expenses on your tax return. There are many great organizations out there that can help with grants and with low interest loans. There are several that we have been very blessed with. I'm thankful for that. For foster adoptions, can we claim anything after the child is placed with us but before we finalize? No, you cannot. The adoption for foster care adoptions and international adoptions must be final before you can claim any of the credit. You cannot claim any of the adoption tax credit until they are final. In your experience, does the online or TurboTax software handle the adoption tax credit well? Unfortunately, no. I have had to amend a lot of returns, and the main reason is because there are several intricacies of the adoption tax credit depending on the type of adoption, when it was finalized, what type of adoption is, and generally those softwares don't understand the individual details of the adoption tax credit. The maximum amount does not change per the type of adoption, but when to take it and how to take it, that is what the software does not understand. I have heard that some people who use the adoption tax credit get audited by the IRS. What tips do you have for avoiding tax audits when using the credit? Well, the main reason that there was 68% of adoption tax credit returns went under review in 2010 and in 2011 is because it was refundable and very large refunds went out. So the IRS was trying to make sure that they were all legitimate. Because anytime you have that large of a credit, there is instances of fraud. So the documentation was the biggest issue. That's why we emphasize make sure you have the right documentation when you get home. Put it in an envelope. Make sure that they're signed and dated. So if the IRS requests documentation, you have it right there and you can send them. And in the event, if they do request documentation, I do have a couple recommendations if they request more documents. Number one, make sure you send them the right documents. Number two, whoever is the primary taxpayer on that tax return, put their social security number off the top of every single page that you are sending them in red Sharpie. Make sure you staple all of it together. Make sure you send it registered receipt so that you know when it hits the IRS. And you can say, I have a copy of registered receipt. This is when it was received. Because sometimes when the tax return and documentation gets to the IRS, it gets separated. And unless they have a social security number on all that documents, there's no way in order for it to get back together. So you need to make sure you have all of your documents in order and make sure you claim it properly. Let's see, here's a question. If you have a failed adoption and then decide not to pursue adoption, can you claim the tax credit, or do you have to have a successful adoption at some point? Well, if you have claimed for a failed adoption, you cannot claim it a failed adoption again until you have a successful adoption. Put it that way. Let's see, I saw one. let me see here. We adopted a special needs child through foster care, but our AGI puts us over the limit and for claiming the credit. Can we still claim it, or does the phase out still apply? The phase out still applies to foster care adoptions. Yes, it does. And it's modified adjusted gross income. If your income is in that range, it goes out in increments of the amount that you can apply for. But once it gets to the maximum amount, you are not eligible for the adoption tax credit. We still have some confusion about when to claim. If you finalize an international adoption, can you claim that year? Yes. If your international adoption was finalized in 2016, you claim it on your 2016 return. For domestic, you can wait until it's final. You can wait until the domestic is final, which most people do because it's easier. You just accumulate all of the expenses, and then whenever the adoption is final, say the domestic adoption was final in 2016, you would claim it on your 2016 return that you're doing right now. If you choose to, and say you had expenses in 16 and it was not final, and it comes to 2017 and it's still not final, you can claim the expenses on 16 that you paid in 16, you can claim them on your 2017 return. The 6 months wait is just for claiming them as a dependent on international. Let me clarify this on the international, because that's the only one that it applies to. On the international adoption, if you came home the last 6 months of the year, so let's say from July to December, okay, you came home the last 6 months of the year with your child, and your adoption's final, you can claim the adoption tax credit for that child. Okay, but you need to wait until the next year to claim them as a dependent. Okay, because it all hinges on being a U.S. citizen, because they are not a U.S. citizen before the adoption began. Now, if you came home the first 6 months of the year with an international adoption, you have nothing to worry about. You claim the adoption tax credit and you claim them as a dependent. If you came home the last 6 months of the year with an international adoption, you claim the adoption tax credit, but you wait until the following year to claim them as a dependent. If you adopt 2 children in a single year, can you receive the 2 adoption tax credit? Yes. And then carry both over for the next 5 years? Yes. If you have more than one, you can claim them. It's a one-time credit per child. We have an A-10 and waiting on a Social Security number. Can we use the A-10 for taxes? Yes, you can, but remember they do expire, and you do not qualify for earned income credit with an A-10. So if you are in the income category to qualify for earned income credit, then you need to wait and get that Social Security number. It generally does not take very long to get the Social Security number. So if you can wait, or even if you want to file an extension, you can do that. What do you mean the failed adoption would have to go against the successful adoption? Can you spell it out by way of example? Okay, let's say you had a failed adoption expenses of $5,000, okay, and then you had a successful adoption, okay. So if you claimed $5,000 of credit for the failed adoption previously, and then you had a successful adoption in 2016, the adoption tax credit is $13,460. So you had previously claimed $5,000 for the adoption tax credit on the failed adoption. So you would only qualify for $8,460 for the successful adoption. I hope that clears that up for you. The final adoption, the qualified adoption maximum for 2016 is $13,460. So if you previously take $5,000 for a failed adoption, you would only qualify for $8,460 of the successful adoption that you had in 2016. Let's see if there's any more questions. credit. So you claim the adoption tax credit in 2016. What you do not use for your 2016 return, you carry that forward to the next year, and you can carry that forward for up to 5 years, either until the 5-year carry forward period is up or you use the credit, whichever one comes first.
Can you hear me now? This is Eve.
Yes.
Okay, I switched back to the audio. I'm so sorry about the sound going out, but thank you, Becky, for fielding and reading those questions so quickly as I typed them in, and
You did
everyone
great.
for sending tons of questions. Unfortunately, we are out of time now, but this has been such a great overview, just a really complex topic, it sounds like. And I'd like to thank Becky Wilmoth for sharing her expertise and everyone who attended. We'd also like to thank our sponsor, America's Christian Credit Union, at americaschristiancu.com. And due to their support, the replay of this webinar will remain free. Look for the recording at adoptivefamilies.com/webinars. The link to the recording and the handouts will also be emailed to everyone who registered for today's webinar. Thank you so much.
Thank you. That was wonderful. You type fast.